Hello and welcome everyone into today's class, which is going to be on how to hold your positions longer. In this class, I'm going to break down how to build conviction to stay in the winners and how do you avoid premature exits and what I look for to hold trades longer. And in the end, I will show you some real example from my recent trades. I'm talking about is just not bluff. It's just actually I apply it in real time every single day to get those 100, 200%, even 500% and trades too on a pretty regular basis because I have a system in place. And now I'm going to give you that system so you can hold your trades longer too with confidence because you have system in place and there's literally no reason to sell if your system is not telling you to sell. The first thing is that you need to understand is the market always moves based on liquidity. So if a move started somewhere from the highs, let's say we're playing a downside, so it's gonna finish somewhere, somewhere around the bottom here. And if I entered right at the top, I got no reason to sell somewhere in the middle here or here, because if I knew if price have to go here before reversing higher or before reversing or a small trend change, doesn't have to be full reversal, but a small trend change and then continuation to the downside. So you need to identify this pattern here, but for this you need to understand that liquidity moves the market from swing highs to swing lows, right? So let's say this is the swing highs that price formed, right? Price is going higher and it formed this swing highs and is coming around somewhere like this, right? And this is the swing lows right here. Liquidity sweep happened and then SBP right here. Again, guys, I'm not going to go into my strategy, how I use it. It's pretty straightforward. It's a PSS model that I use, and then the strategy is pretty clear. Price goes into liquidity pockets or liquidity sweep, and then you get a sweep of prior swing highs, price close back below, and then SBP happens, basically a trend shift, lower lows and lower highs. And if we get a pullback into high value zone, if nice, if not, that's fine too. We're going to put the stops at the highs and target the next swing lows, which is where the next level of liquidity resides. So that's pretty clear. I have made tons and tons of videos on it. Go to the free education section and then you can find my videos on how to spot liquidity sweeps, how to spot liquidity pockets, and on also my PSS model in whole. So definitely after watching this, go and watch that videos too in sequence to learn more about my model, and then let's go from there. So this is the first confirmation that we're gonna get for our entry once I enter into a trade. So this is my short entry. So my stop loss is going to be this highs. Let's say you're on a 5-minute time frame or even 1-minute time frame. The one thing that you will notice, as price going to the downside, you will not see the highs gets breached in any trendy market. It could be 1 minute, 5 minute, 15 or hourly, or even daily or weekly time frame. Price will continue to make lower lows and lower highs, lower lows and lower highs, something like this, and then until your target will hit. And once it will hit your target, it means it will sweep the liquidity of this swing lows. Then price will reverse, it will break above the swing highs, confirming that another change in trend. That means this is a time I need to get out of my trade. Most likely runners I'm going to hold at this point. If you're holding full position, that's good too, right? So this is a sign it's going to be for me to get out of a trade when the trend shifted from lower lows, lower highs to higher highs and higher lows, right? So, it can happen. It doesn't have, sometimes the price goes, it doesn't hit your target, but so this is going to be our external range liquidity, and any swing low that comes in the inside the range is going to be our internal range liquidity. So price has two options always to reverse. It can reverse from internal range liquidity and it can reverse of external range liquidity, but I usually set my targets at external range liquidity. The only reason is because price have more liquidity above and below. That means more stops above and below external range liquidity. So these tend to act as a stronger magnets for price. Price often comes to these levels and then reverse back higher, or small continuation and then comes back lower, right? So this thing that you need to understand. So let's say price comes to this internal range liquidity, which is higher low. In this uptrend, as price comes down, it can come to this internal range liquidity, sweep that, and then reverse based of that too. But the exit setup is definitely gonna look the same. Is as soon as price breaks above this prior highs, that means that then that is a clear sweep, right? That is definitely clear sweep. If you see right here, right now you see this trap being set up. You do not want to stay in a position when you see something like this, a trap. So most of the time, if you're trading breakouts, you're going to see this type of setup a lot of time, where you are trading the breakout. So this is the breakout line, and then price goes higher, and then boom, another move higher, and then closes back below. So this is your breakout line. So now that's a clear trap. So at this time, no one stays in the trade. If you're definitely in the market for a long time, then if you're staying in the trade, that's still you're working on a hope. So same kind of setup here. You don't want to stay in a position once you see that trap is happening in real time. And another thing that I actually use, I would say I nowadays I use it because I have a pretty clear rules: lower lows, lower highs, or higher highs and higher lows, to stay in a positions longer. And you can use, if you're new to the market or if you're new to the technical analysis, one simple thing that you can use in combination with lower lows and lower high structure is you can use the magnets. Maze 5 and 8 is what I used to do before I even, I would say, learned about this kind of stuff. I started with EMAs. I back tested it a lot in my first 1 or 2 years of profitable trading. Is price in a trendy market, price tend to respect that of 5 and 8 EMA, but you cannot solely rely on these indicators for your exit position. It's just there to really show you that price is trendy, the downside, but your main confirmation is only going to be this structure breaks on either time frame, be 1, 5, 10, right? So let me show you some of the examples now on SPY. So let's say this um, move that we caught the other day. You can just basically talk about any move, any uptrend or downtrend move. If you see on 5 minute right here, or even I can go on 1 minute time frame to show you, it's pretty clear stuff. In this downtrend, price massive gap down, and now price is clearly making lower lows and lower highs, another lower highs, lower lows, sideways consolidation, and then another move to the downside. Boom, right? So as you can see in a bigger picture, lower lows, no reason to sell. Price made another, keep making lows. So at this point, if you're selling, let's say as price going down somewhere around here, there's literally no reason to sell. There's no reason to sell your full position here, because you see price is in a clear downtrend, lower lows and lower highs, unless price breaches above this swing lows that it made right here. So this is a swing lows that it made. So your first confirmation is going to be you don't want to avoid premature exits by following this rule. Is price is staying below prior swing lows and it's not closing above. That means there's no liquidity sweep happening, you see right here. So this was a swing low that price made. So this was the first swing low price made. Price failed to close above it. That means I need to stay in a position. So this is another swing low price made, lower highs, lower lows, right? And then price stayed below this swing low. Same thing here. And now, boom, massive downside move, sideways consolidation. And then in the next move, price is staying below this swing lows here, right here. So I got no reason to sell. Again, in this move, Boom, lower lows and lower highs. Price goes into this liquidity pocket. Boom, massive dump again. What's happening? Lower lows, lower highs, lower lows, lower highs, lower lows, and lower highs. I would sell my position somewhere if so. Now, this is the low that price formed, right? And now you can see price broke above it, massively pumped higher, or and clearly formed higher highs and higher lows. At this point, if I'm in this position for long, if I, let's say this is my entry, I caught this massive move to the downside, and now my exit is now exit right here. Even though dumped, I really don't care. But the thing is, you have to follow your system when you exiting your trade. As soon as this happens, that means I no longer need to be in a trade. I need to exit my trade, or I need to enter into a long trade, because for long trades, I have definitely more uh, confirmations other than just this one. But for exits, this is the one basic strat that I follow. For long entry, it's just that's a different story. So as soon as it's happened, I'm out. But if I, let's say, need to enter the trade again, what I'm gonna do? So liquidity sweep, and this is a short entry because price is in a downtrend, and then another liquidity sweep, another trap, and then lower lows, lower highs, price breaking below it. That's my another entry right here. And then after this, price is still making lower lows and lower highs, and price breaking above this swing highs. You see, that's my exit right there. And then boom, prices kept going higher and higher. So this is the method, this is a system that you need to follow if maximize your returns on every single trade. You don't have to hold. Let's say you got in with 5 contracts on your trades, and start practicing it with only one contract. What max can happen, your break even stop will hit, that's it. If you want to practice it, you don't, let's say on 0 days, sometimes it's kind of hard to hold, especially if you're new, because you have to see big swings in price. Let's say your position is 80%, and then slight move higher, and then you go back to 30%, 20%, and the next move down, and then you're up 130, 150%. So for 0 days, for small accounts, especially when you don't have that mindset of holding and then seeing those big drawdowns on 0 days, I want you to practice this system on 1 day to 3 day options, is because you're not going to see a lot of movements, but you'll be able to hold your positions longer, and only then you're going to build a lot of conviction in your trades when you don't see a big drawdown in your options premiums, right? So if you're 0 days to users, you always have the thing, I should take profit, you're up $100, and in the next moment, you're only up 30, and then you sell, and the price comes back down, and then you're up 200, and they'll be like, oh shit, I should have hold my position, I should have sell. I see this all the time. But instead of have this regret, you can just go 1 or 3 days out, where you won't have much anxiety of seeing those big drawdowns, and you can just actually hold your positions far longer, just by following this one system, by just waiting for price to show you actually what it wants to do. Instead, you're just relying on your emotions and then just looking at your P&L. And then this is a very good system to actually not have any emotions at all in your system, because you're just following the system. If the price is breaking the highs, only then you're going to sell, right? Now let me show you a quick example on the magnets too on 5 minutes. So look at this. It's not going to be a little bit clear. Candle's going to close above, but it's definitely a good representation of how the market reacts around these magnets. Again, these magnets not going to work on a choppy market. On a choppy market, you will definitely have to rely more on structural breaks on smaller time frames to avoid those premature exits, or even get those premature entries too. So right here, price is below the 5 and 8 magnet, and then boom, lower highs staying below it. As long as you see price is staying below the magnets, I got literally no reason to sell. The moment you're closing above right here, above the magnet, I see the trend is changing too. If I'm holding the trade using the 5 minute time frame and not the 1 minute time frame, obviously I'm gonna able to catch bigger moves, because if I'm looking at higher highs and higher lows, it's gonna be a lot lower on 5 minute time frame than comparing to 1 minute time frame. If you see this time frame, this move up right here on 1 minute, that's a clear lower lows and lower highs multiple. But in 5 or 10 minute time frame, that's just one straight line, and then boom right here, and then now there's another one. So if that happens on a 5 minute time frame, this is where I would exit my positions right here, but I was able to catch this massive, massive, massive move right here, up until here, and then this move right here. So now from here, I would I will come back into the long position when this setup happens right here. So this is the one key thing that you need to have in your trading system. Does not matter which time frame you are, trading. Most of you don't even have on how to hold your positions longer strategy. So now this can be your strategy on hold your positions longer on every single day basis. Let me know if you still have any questions on this before I show you some real examples and a little bit more insights on what I look for mid trade to actually hold it longer. So let's go back on the 1 minute time frame. Where was this example? Let's take an example. And then the one thing that I always look for in a mid trade to actually hold my position longer is one thing that, remember, I told you in the beginning of the class, there's always gonna be a liquidity sweep at some point because prices cannot move without liquidity sweeps. It have to have liquidity sweeps on either time frame or even though when price is in a continuation setup, you will see liquidity sweeps in price. And if you're already in a trade and you're seeing one happening, then it's just pretty easy for me to hold a trade longer because I'm getting confirmation after confirmation that prices wants to go down. Prices in clear downtrend, making lower lows and lower highs as price, and it's below the magnets or above the magnet depending if you're long or short. And as price going down, it's forming these liquidity sweeps. So on this 1 minute time frame, it's a pretty clear setup. So this was the high of the day, and then most people will say this is the orb strategy, right? But it did not work here. Price closed above and then closed back below. So breakout strategies rarely work. So what you want to trade is opposite of breakout, which is a fake out. Liquidity sweeps have higher success rate and then higher win rate. The only reason is for liquidity sweeps or fake outs have higher win rate is you get little to no risk on your position, then you can actually catch a big moves just like this right here. Price closed below a high of the day, massive liquidity sweep, and then where's their stop at? Their stop is at this next swing lows right here, and then we have this massive gap to fill below. So price closed below a clean liquidity sweep. SBP happened. I'm gonna get trade right away. I'm gonna put my stops right at the highs, and then I'm gonna trade the continuation towards this next swing low because this is where the next level of liquidity is, right? And then probably more if I look at the ES chart, right? Again, I don't use pre-market. I don't use post-market charts on SPY. They are irrelevant. They don't give you the full picture. If you want to have levels, if you want to have swing highs and swing lows levels, always use ES or NQ to mark your levels. Just never use those pre and post-market levels on SPY. They don't work. I never turned it on in my 6+ years of profitable trading career. So I don't see the point. So just go on ES and then mark those levels there. You'll get more benefit learning those. So back to the topic. So right here, you see price never formed a higher highs or higher lows. So this is the lower lows and lower high formed, a clean small lower lows and lower highs, another one, and then boom to the downside. But if you see, there is liquidity sweeps after liquidity sweeps, right here, price tried to go higher in this example. And then what it did, ended up doing is broke above the swing highs and then created another trap for the bulls and boom, back down. So this is what I call a fake confirmation for market to trap basically dumb bulls or dumb traders in the market. So that's what's going to happen most of the time. Market show you this fake liquidity sweep and then it pumps right back up, breaking above the swing highs, and then come back down right here. So that's a clean liquidity sweep again that we just saw right here. But most people would only trade this and they will miss the setup because thinking of how lower the market can go or how higher the market can go. Market can move how much it's want to move. It's up to the market. Our job is to just take the setup and let market do what it wants to do. And our control is just to press that buy button and just hold the trade until it's not showing any signs of reversal. So right here, I would definitely take that trade again. So the reason that you see, I think on Tuesday, I got 10 trades in SPY, 10 fucking trades in one day SPY using this exact strategy where I got in at the top, price moves down, then a fake out from the eternal range liquidity sweep, trapping more bulls. But this would be my second entry. Boom, price closes back down. And right here was a no sign on a 5-minute time frame of higher highs and higher low. Remember what I said in just a couple of minutes ago? On 5-minute time frame, you will only see this one line higher. You won't see something like your trend has shifted here, but on 5-minute you will only see one straight line. But something you want to see is like this. On higher time frame, that will actually show you the trend has shifted, right? But on 1 minute, I told you is you're gonna see a lot of swing highs and swing lows. So if you're new, stay away from it when it comes to taking an entry of 1 minute time frame, right? So, or even some exiting is fine too. But if you're holding 1 to 3 dates options, then you should definitely rely on minimum 5-minute time frame structure break before exiting your trade. Again, you're not going to sell the bottom on this one, but you will definitely catch a big chunk of the whole move to the downside. So let's say this here, massive move to the downside, right? You may not able to be sell exact at the bottom. You maybe sell somewhere around here, but it's just better to catch 80% of the move than only catch 20 or 30% of the move without no system, right? So right here, we got this liquidity sweep, boom, price back down, no reason for me to sell my original position. But what I did, now I added another layer of puts in right in here, my stops at this swing highs or either this swing highs, right? So that's my second layer that I added on top. And then what happened, what's my target is going to be? My target is going to be this new swing lows right here. So one thing, again, guys, this is an advanced class, and then I'm expecting you guys know my system, and then you guys understanding every little detail that I'm telling you or making notes, because they do matter when you go and trade live charts. One thing that I told you guys is price, if the price is in a downtrend or uptrend, it will respect these prior lows right here. So it is respecting this lows right here. It did not break above. You know what's that sign? It's a clear. So there is no sweep happening. Price not closing above. So that means there's no sweep happening for the bulls. That means the price is gonna stay in a downtrend, is gonna go down, right? So you see, not breaking above. No reason for me to actually close the position or enter long positions, but instead it gave me another sweep right here and then boom, back down. And then my target, this new swing lows on the day, and it did to the T again. Boom. Did it close above again? Did it give us a sweep right here to sell? No. And then, so that means I'm going to hold. But if you see one more thing closely, again, I'm going to zoom in right here. So this was the swing highs. We got another liquidity sweep. Boom. So that means confirmations after confirmations of liquidity sweep within that width range as price is going to the downside. So this type of confirmations, when I get, I just got more conviction. I got just these more signals It's literally market telling me you just stay in a trade or you enter another layer and you catch this big move 2 or 5 times instead of just buying the top here and buying puts and then selling somewhere here. But I can actually add 3 layers as price going down, obviously, right? So right here, another layer added, boom. And what's my next target? New lows on the day. Price is going to the downside. And then what I see again, there's definitely going to be another sweep. As price is going to the downside, price formed this sideways range. And then, so this was the prior swing lows, right? So clearly prior swing lows, this one, because price swing highs, swing lows made here. So this prior swing lows made, did price break above once? Again, never. Price is staying below the swing low. That means there was no sweep again for the bulls, but there was a sweep, liquidity sweep right here, all this on this wicks, boom, to the downside again. Has so many examples in one single day, so many swing highs. So this was a prior swing lows made again, did breach, never breached again. Instead, it retested it, came back down, and then the only time when it reversed. So this was swing lows price made. So now that's a trap. Now that's a trap for the bears, for the late bears. And then price closed back above, boom, move higher. But now the same setup that I showed you guys here, a liquidity sweep right here, liquidity sweep right here, liquidity sweep right here. So now the same setup is forming on a higher time frame, on 5-minute time frame, right? Which is a liquidity sweep on a 5-minute time frame somewhere. Let me show you on a 5-minute time frame right here. This was swing highs on 5-minute time frame. Swept it, boom. What's my target? New swing lows. Right. So this is the thing that you need to look for as price is going down, because thing is these are just confirmations after confirmations for you to stay in a trade or to actually add another layer, or if you missed on the move, you can add your positions here. The stop loss is definitely going to be the swing highs or when the trend has shifted. Pretty simple, very straightforward and easy to follow. I'm not telling you you wait for this MACD cross. I'm not telling you to wait for some kind of divergence to form. I'm not telling you to use a volume or anything like that. It's just pure price action, just naked candles, and that's all you need to do. If you have indicators on your chart that is telling you when to exit, it's just too late. You just not gonna have enough success rate. You're not gonna have high winning rate, or you won't be able to catch big moves in the market, because indicators they lag in price, and then whatever I'm showing you, and it's just pure price. There's no lagging factor, just looking at the price and then just making a decision based on how the market is reacting. And then you won't need a level 2 data, you won't need any professional data, or you won't need indicators, or you won't need any option flow, or just you won't need anything. You guys see me trade every single day live. I'm sharing my screens, giving you these 10 trades a day, just using this one simple system. That's it all about. So now let's look at some of the examples that I took in the recent days, where I literally sniped the tops and bottom, just literally killed it. Where was Tuesday? This was Tuesday. Guys, Tuesday was choppy as fuck, but definitely killed that options on Tuesdays. As you see, on Tuesday, I got up and then I saw price ripping higher. I really did not care entering at all into in long position, because I missed this setup right off open, and then that was a clean break, higher highs and higher lows. You see, price is clearly making those higher highs and higher lows. So there was no reason for me to actually short here. So what I did is, instead of going short, I waited for price to come back into some sort of liquidity pockets or some sort of sweep on a lower time frame to enter into a long position. That's what I exactly did before we caught this massive move to the upside for, I think, 400%. It went. Let me to replay this one for you. And let me show you what I saw in this setup before I get into a trade. So that's a price was in a clear downtrend now. Lower lows and lower highs were forming, right? And then so this was the internal range liquidity right here. The internal range is this swing lows right here, right? Price went to this internal range liquidity, swept that internal range because now this becomes our external range. This box is our external range liquidity, right? So any swing low that is in this is internal range, this is internal range liquidity, right? So this one is internal range liquidity. So I was waiting for some sort of reversal either from internal range liquidity or from external range liquidity. That means, but it was pretty clear to me that price just wants to move higher because of the higher time frame trend was clearly bullish. But again, 1 minute, I told you, there's going to be a lot of trend changes. You don't want to get trapped on this, but this was definitely a good move to cash to on if you're playing downside. That's a clean liquidity sweep, price breaking below the swing lows here, a clean SPP. That would have been easy move to catch. But again, I don't like to do this kind of stuff when I know price is in a clear downtrend and it's not exhausted and it has room to run. So I'm just playing with the trend at this point, right? So right here, I got internal range liquidity sweep, boom. But this is not where I enter into a position. I waited for a confirmation, which was breaking above swing highs. So now price is clearly making higher highs and higher lows. So this is the first time that price is making higher highs and higher lows after this downtrend. So now this was my confirmation. Candle closed above, and now my risk was either this lows here or this external range liquidity sweep low. Price broke. Price couldn't break below it and held above it. As soon as I got this candle close above, that's a clear sign of SPP. I alerted calls to my team. I think it was like 523 calls or 526 calls, something like that. And then we got this another highs and another highs, and then boom, guys, massive move to the upside. And you see no reason to sell. Higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows right here. And then this is exactly where I sold my trade. So this was the swing high that price formed right here. And then we saw a trap right here. As when I saw this, I sold my long position because I knew price can actually reverse from here. And what I did after was even more impressive for probably most of you, but I was just following my system. Is now I went back on the 5 minute time frame to see if I can get into short positions. Right at the top, what have we got? Right, a massive sweep of prior swing highs, massive rejection. As soon as I got this rejection on 1 minute, that was a clear lower lows and lower highs forming. I saw this. I was like, okay, team, I'm going short now with my stop loss at highs that day. Right after I got into calls at the bottom, I shorted the top right here after liquidity sweep. And then we got this massive dump again for I think another 400% in trade. And then you guys see this, there is literally no, I had literally had no bias. I didn't know this move coming. I was just following my system, and it helped me to that dot to identify this move right here. And I also added another layer for 100% trade within this move right here. And then how did I do that? Is the same thing that I just told you like a couple of minutes ago. Internal the sweep of continuation right here. Boom. This is a sweep I got as price was sweeping this. Ad was going down. Swept it. Was very confident that it's going to go down. And then as price went higher and then it started to rejecting, and as it started to rejecting, I alerted another entry to my team that it's going to go down. And then boom, look, another massive move to the downside that we caught right from the top. Another 3-point move. That's at almost 30 ES points. That's $1,500 right there if you're trading futures with the risk of what? Only 50 cents, 5-point risk, and then you're catching 15 to 20 points on your ES, and on SPY, it's just a ridiculous move. So another move that I caught right here, and I did not trade this move up because you already was satisfied with this fall 400%, this move lower. I think I also added some puts in here. So I think I got like 10 trades this day just using this exact strat. And then right here, right when the market was about to close, I used this exact system again to get into shorts again, is price closing below it, this level, a clean liquidity sweep, lower lows and lower highs. This is where I got into puts again, end of the day, power hour dump, and then we made another, I think, 170% on our puts right here. Trend changed, closed above it, a clear trap. I sold my runners right around here. So you guys see, I follow the system again. You every single day to the dot. I mean, I can just show you tons and tons and tons of example of this on daily time frame, on weekly time frame. But the one similar thing that you will find is price is always going to move from one liquidity level to another liquidity level. And how did I know this big move is coming in price? On the daily chart, you see on daily chart, we got this massive sweep, right? Prices in the sideways range, massive sweep is coming. Where it's gonna go? It's gonna go to this swing lows, which is internal liquidity, and external range liquidity is right here. So this is the box of external range. So this is the internal range liquidity. This is internal range. So price has three levels to go. Either it's gonna reverse from here to the upside, or it's going to reverse from here, or it's going to go to the external range and then it's going to reverse from there, right? But it did not reverse any of it from there. So I was pretty confident that price is going to continue to the downside. And if I turn on my magnets on the daily chart, look what happened. Every single time price comes to this 5 and 8 magnets on the daily, on the pullback, shut back down, move, shut back down. And then when the trend has actually shifted on the daily time frame, where we went long and stuff, is you see this prior swing low. This is swing lows right here. As you see this swing lows, this was swing lows. Price couldn't break above, stayed below, easy shorts. This swing low, price broke, stayed below, easy shorts. So now this swing lows price found, but it didn't stay below. Instead, we got this trap here on the daily time frame, followed by a swing high break. That's a clear sign for me that I don't need to short it anymore for a couple days. I just need to stay in longs on intraday time frame, and we got this higher highs and higher lows. But what happened after? The same thing I told you, as price is going to the downside, is going to give us confirmations after confirmation in the form of liquidity sweeps. This is exactly it did on the daily time frame too. That's the reason I caught this massive move down again. After catching this big move, this is where I told my team we're going to catch another big move to the downside, and it's coming. So you see, swing highs, another massive fucking sweep right here. Another sweep, and where's price going to go? This bottom right here, and it hit our target in just 3 or 4 days. Boom, massive move to the downside, and then candle closed back below. So this is another sweep right here, and then next day price dumped downside. This was the next level of external range. There was literally no external range liquidity after this move, so we definitely saw this move coming, and we called it all too. Right. So that's how you can analyze the charts using this one system, regardless of the daily, it's a weekly, 1 minute, 5, 15, 60, does not matter the time frame. The one thing that you need to understand the core of this system when it comes to holding your positions longer, or identifying the trend as it's going down or as it's going to the upside. You can see tons and tons of examples right from, look at this, swing, internal range liquidity, sweep, massive sweep, higher highs and higher lows. You know, like a short in this environment, no, this zero reason for me to short. Price swept internal range liquidity, closed up on the daily time frame. This was a swing low, price formed, closing above swing lows, traps after traps, and then I don't want to sell unless price breaking above the swing highs and then trapping another late bulls here and then dumping again. So once you start observing and marking the price action like this, there'll be much lower chance for you guys to lose a trade, and then you will find yourself in the winning trades very often. Just we have been on a winning streak from almost last 10-11 weeks, right? Since if that's almost the start of this year, only got 2 or 4 red days. The reason I'm following the system and applying the system on the daily time frame, so I'm having a very clear bias of what I'm going to do, and then my emotions don't run high when I'm into a trade because I know I'm following my system. What the max can happen? What's the max can happen? It's just you want to get stopped out. That's it, because I know my system works. And next time if I get into a trade, I know I'm gonna get a bigger trade regardless. So even if I and then one thing is, I think on Friday or day before Friday, I think we got on Wednesday actually. It was a flat day for me, for us, where we got, I think first trade went 20%, and the second trade went 25%, and then very choppy day. And then third or fourth trade, I think one trade I closed at -8% and one trade I closed for -15%. And the reason was for it that I close my trades at -8, -15, or even -20 is such a number when I compare it to my winning days. My winning trades are like 100%, 200%, 300% on average, but my losses are like max 20%. The reason is I'm following this system. I'm following this 1 minute change of structure, and as soon as it happens, I get a trade. I don't hold my the only time you're gonna lose when you're holding your position is because you're too stubborn to sell. That's about it. Your ego is too high. You just cannot sell, even if your mind is telling you to sell, but your emotions come into the way. That if the thing, like, if you sold your positions in your head, and then in your head if you decided that it's just not working out, but your emotions, just letting you stay in that trade, and then you get in the hopium stage. It's going to come back to break even. I'm going to sell is, and then it just never comes to break even. It just goes red and red, red and red, more and red. And then from -20 you go to -70, and then after going to -70 you be like, you know what, I'm just going to hold at this point. And then you lost your profit days, and then your confidence is shattered, your conviction is dead, and next time you get into a trade, you go with a lower position size, and then what happens, you hit a banger on a lower position size, and then you'd be like, shit, next time I'm gonna size up again. Next time you size up again, and then you in that vicious cycle where you cannot get out because you are not following your any of the rules, right? It's just everybody story, right? The reason that I have experienced this, so and then I'm telling you the way I got out of that situation is just by having a simple set of rules that I literally told you now. Entry strategies I have in the free education section. I have my exit strategies, that I just told you, my strategies on how to hold trades longer, right? And if you guys want to manage risk, go and watch the Q&A session, guys. You guys didn't even watch it. I can bet the thing has only 100 views on it. So go ahead and watch the Q&A section if you are the Q&A video that I made, I think 2-3 weeks ago. Go ahead and watch this. Yeah, literally, you guys, how to manage a small account there, how to manage your risk in there, or how to position size in properly. If you're an option trader, if you have a small account of 2,000, or how you can scale it to 4 or 6K or even 20K, right? I did that, so I'm just telling you the same thing. So you need to get out of this mindset. Then everything will be easy. Just follow the fucking system, guys. That's about it. So I got the cycle of the most traders that they get into. So just follow the system, and then have a system in place for every little thing. Either it's entries, exit, holding, or selling, or getting into a trade, staying out of it. Have a system for everything, and then your portfolio is gonna thank you big big time. No, my sizing does not change at all. I did talk about more in that Q&A session. I think in the somewhere around the middle in the end. Go ahead and watch it. I answered literally every single question. All right, guys, I'm gonna go. Hope you guys enjoyed this class. I'm gonna take a leave, and if you guys still have any questions, you can DM me or ask me in the chat, and I will catch you guys next week. Have a good weekend, everyone.